Good afternoon, everyone. Welcome to today's Wednesday market review. My name is Stock Darts, and we're going to do what we normally do on Wednesdays. We're going to take a look at the four major market indices. We're going to look at the S&P 500, the Nasdaq Composite, the Dow Jones, and the Russell 2000. Once I finish looking at those, I'll take a quick look at the US dollar. I will also take a look at the gold and silver ETFs as well as oil. And we'll see where they stand, how they're affecting, how commodities are behaving compared to the dollar, and then from there we'll move on to any chart requests. If someone in here has a chart they want me to look at, feel free to type it into the chat. I'd be more than happy to go ahead and take a look and give you my take on whatever chart it is you are looking at. If you like what you see here, you can always follow me at Twitter at StockDarts. You can find these videos on YouTube at StockDarts, or you can visit me at patreon.com/StockDarts, where I post weekly blog content including trade ideas, as well as just different posts on how we go ahead and try to manage our ideas after diagnosing the market on Wednesdays. We also put the reposts of these Wednesday market reviews on that blog as well. We've had a decent last couple of weeks with some of our picks, and hoping to continue that with the trades that we're looking at this week as well. If you, for whatever reason, can't ask me a question on here, again, just find me on Twitter, and you can always ask me questions there, and I'd be more than happy to help you out throughout the week if for whatever reason you can't join us on a Wednesday, or if you're here and you just rather ask in a different way. Alright, so let's start off with a look at the S&P 500 through the ETF SPY. Now, we had a good week, and actually a good close to last week, and then a good start to this week. And today's a red day, and yesterday was a little bit of a red day as well, but today's, I think, the first day we're really starting to see a little bit more selling pressure. Looks like we are finally maybe coming into some support on the really short-term 5-minute candles. But as far as the daily chart is concerned, as you can see, these last couple of days we're starting to sell off after kind of really moving upwards. Now, I think at this point, from what I'm seeing, this selling is really nothing more than probably profit taking and just the market taking a breather. We did what was important, which was breaking through this level right here, right? This 342, 343 level. And the fact that we're able to break out last week and then kind of accelerate through that leads me to believe that the bulls are back in control and looking for new highs, or at the very least a test of all-time highs. And I expect that to happen sometime either at the end of this week or the beginning or to the middle of next week. I don't think it's a long ways away from us coming up and challenging them. Now, are we ready to push past them? I think that's a different question. Really, the only one that has an answer to that is the market, and we'll see what happens when we come up and test them. But I think at this point, with the breakout we had above this 342, which I'll go into in a minute as to why it's kind of an important level, but with breaking now through it the way that we have, I think at this point it's probably a much more likely scenario that we come up and test these highs rather than reverse at where we are now and head back below that level and back towards our moving averages. Now, why is this level important? Well, let's zoom in a little bit. Alright, so if we go ahead and take a look at what happened last time, we made new highs back in September, the beginning of September, and then we had our first real selling pressure on September 3rd, as we finally had a break below this rising wedge. We had a string of rising wedges leading up to this, showing that the market was starting to get overbought, a little bit stretched out, and as I explained back during the Wednesday webinars or the Wednesday streams around that time, a lot of times what happens with the market structure is you get these it's almost like a squeeze. It wasn't a squeeze in the manner in the normal manner of speaking because there's too many shorts. It was more of a squeeze because there weren't enough shorts, and so the market was just dripping upwards because there was only buyers, and really the only sellers were market makers who had to hedge themselves by adding more long and more fuel to the fire by hedging themselves with options. And eventually what happens with this is you will have that imbalance kind of shift back in the other direction. And once you have the selling pressure, you have all these market makers that have to deleverage and get back to the short side and then try to neutralize it. And at the same time, you have the weaker buyers that have been kind of chasing the price action upwards, which are usually the first to abandon their shares. And so what usually happens when you have these rising wedges is you get this quick 1 or 2 day move down, but then eventually it normalizes and you get back to the regular price action. Now in this particular case, the move down was a little bit more extended, but it was probably not anything out of the realm of normal price action when you consider, and we'll zoom back out for a second, the nature of what this squeeze was. You can look at this as one. You can look at it as just one big rising wedge, really, um, or one kind of extended, one kind of just extended channel, right? And so the fact that we broke down from that and traded back down, we just retraced about half of that move. And so overall, it's not anything really out of the ordinary, and it's not anything to get a little bit, a little too worried about as far as having this kind of selling pressure. I think this was the first real correction we've had in this market since back in June, and even this correction was really not much to speak of if you really go back and take a look at what we've done since we bottomed out after the COVID-19 breakout. And so as you can see, we've kind of made our way upwards, and we've had a couple of periods of consolidation, but you can see the market, we had these three rising wedges, and then we kind of came back down. And so this correction was not really anything that we shouldn't have expected. It was something that normally happens. We finally broke past that, right? And so here's the key. That first day that we came down, that was the low, right? Excuse me. And then the next day, that was the closing price as we tried to bounce. Then ultimately we couldn't hold that closing price. That was a Friday. The next day we opened up on Monday, and as you can see, that became a pretty good wall of resistance as we continued to try to make our way back above that, and ultimately failed and had to come all the way back down and test our lows at 320. Now since then, we've actually found buyers. Buyers have taken control of the market and have made our way back up to that level. As you can see, we initially found resistance there, and then we were finally able to break out of that late last week on Thursday. So now Thursday, Friday, we moved up, and then this week we started off with a nice gap and run higher. And now we're finally starting to see some selling pressure. But the key is we've been able to reverse this right here, this this price level that was really critical as we started to sell off and couldn't find buyers that were really confident that the market was ready to come up and retest highs. The fact that the buyers now outnumber the sellers in this area leads me to believe that the next level where there's going to be strong selling is likely to be up here at 357 and 358, not necessarily where we are now. What ends up happening now is you have traders that want to exit before we get to those highs because they want to make sure that they don't miss out whenever this market rolls right back over, or if it does roll back over. In their mind, it will. And so they want to get out early, and so that's why you get some profit taking here on the way up to what the real next level of resistance is. And so that's kind of where we stand right now. As you can see, today's candle is starting to get a little longer to the downside. But we are kind of filling that gap, and we should find some support soon and try to probably alleviate this drop a bit by bouncing and trying to just trade sideways as we build up a little flag to make another run up at the highs. And so that's what makes this level really critical, and you'll see it across the board as we look at the NASDAQ, the Dow, and the Russell, is that level that we closed on September 3rd and on September 4th, that became a pretty critical level, and the fact that we've broken past it means that really the next significant level of resistance is all-time highs, at least on the S&P 500 and the NASDAQ. And we'll get to the relevant levels on the others as we get to those charts. And so despite the fact that we are starting to see a little bit of the market tiring out and momentum fading, I think generally speaking, I'm expecting it to turn right back around in the next few days and start making a run back towards highs. So where does that leave us as far as the market is concerned? Well, I think that we've been in a range-bound market, especially if you look at what happened since September 4th to the last, the middle of last week around Wednesday. The market's just been chopping back and forth, and as you can see, there's a lot of every red day is followed by a green day, and then you kind of have these wild swings back and forth. Even when we were bottoming out, we had a nice strong two-day candle that looked like we were ready to bottom out. Then we had the big shakeout, and then we had another strong move. We had another shakeout, and so I think this is still part of that process of shaking people out. But we're stair-stepping upwards. We had stair step down, and then stair step up, and now we're in another stair step up, and it's likely going to be the same thing. When we come back, maybe we have to retest all the way back down to 342. Although I don't think that's going to be the case. I think we probably find some support short of that. And then try to make our way back up. And then the next key is when we can break out through this 352, 353 that's become resistance over the last 2 days, we'll make a quick move back to highs. And then from there we'll see. I don't know if the market is ready to really push through new all-time highs, especially before the election. But we'll see what happens, and we'll see what happens when we get to that. But I expect momentum to persist a bit, and I expect the market to transition a little bit more towards momentum-based strategies as it starts to climb back through this hole and make its way back to highs. And so for the last couple of months, we've been focused mostly on range-bound strategies, particularly buying at support, buying charts that are at the apex of these tight triangles while they're at support. And then this week we shifted a bit. We started looking a little bit more at momentum because I think the market again is starting to pick up some steam and wants to come up and test these highs. And then from there we'll see. It might be that we have to downshift and go back to range-bound market where the new highs or the recent highs are going to be our ceiling. But we'll get to that when we get to that. For now, the way we have to anticipate it is what are we doing this week? And from what I'm seeing is that we broke a clear level, and the next clear level is still kind of up above here. So we're kind of in the middle of that zone. And I expect the momentum at some point to shift back upwards once we find enough buyers to support the price action here. Just like there are sellers that are anticipating a top up here at 358 and they want to get in early, there are going to be buyers that are anticipating a bounce and don't want to wait all the way to 342 because they're scared they're going to miss the move. So they'll probably jump in ahead of time, and so we'll get some support likely before we actually hit this back to this level to retest. So let's take a look at it now. If we zoom back out to what we're seeing as far as the longer term picture is concerned, and we could gauge a little bit better what the levels are that we need to concern ourselves with. So the two levels that we've been mentioning are right now the most critical in the short term. Obviously 342 is going to be support now that it flipped back from resistance to support. And then of course the all-time highs around 358, 359 are going to be a ceiling. But what happens if we lose 342, right? So what if we do pull back? What if there still is more selling pressure and we really are not really even ready to clear this candle here? So if we do lose this, well, we have our moving averages, which are now kind of coiled and crossing back and forth as they go sideways, and they should act as a level of support. This entire area of price action should act as support, and we should find another floor somewhere around 332, and it's going to probably be pretty hard to go below that level considering the amount of price action we'd have to churn through in the moving averages, which are now starting to kind of come back up and start to check upwards as price starts to kind of move upwards and lead it up. So that's going to be a critical level. Now, if the market does indeed become more range bound, right, and we're going to end up with something like this for the foreseeable future, well, then we will have to go chopping right through those moving averages. But we'll see that, right? So if we lose 342 and we get back to the moving averages and we start to push below them, then we can expect the market to maybe come back down and start testing towards the bottom of that range, and we'll have a more clear idea of what the price action is and what it wants to do. Right now, we're still in this. We're kind of in the turning point here, where if this was just a one-time correction and the market wants to push through highs, well, we're not going to come back and retest down at 320. What we're going to do is maybe come back and retest 342, make our way to new highs, and then likely push past them. And that's going to become kind of our signal as to what the market's going to do and how we want to go ahead and evaluate it in the next coming month or two, is how it behaves here as it comes up and approaches these all-time highs. Again, if it slices through the moving averages, well, then we know the market is range-bound, obviously. However, if it holds here and comes right back up, well, there's a chance that we're not going to see this range-bound scenario. There's a chance that we're going to break right back through there, test highs, and then come back and retest, and then this level around 358, 359 will become support. So that's going to be kind of our points of interest and how we want to gauge what the market is doing and where it's going to move in the next couple of months, particularly as we head into the holidays. A lot of times the holiday season is a time where the market wants to rally, and we tend to get more benign price action. Now, we still have a couple of months for that, but as we start to approach Thanksgiving, we'll see just where the market is and whether it wants to continue kind of ramping up and kind of climb higher. But for now, into October sometimes does have a little bit of selling pressure, seasonally speaking, and so there is a chance that we do pull back. But I think more likely than not, the first thing we're going to do is come up and test these highs, and that's how I'm approaching my trading, how I'm approaching the markets at the moment. Now, if we take a look at the NASDAQ and we look at the Qs, you'll see a very similar pattern, right? Again, we had the rising wedge, the rising price action, then we had the big drop, and again, you can see the green line. That was kind of an important price point. Again, it was the lows from that Thursday and the close on that Friday, and then the next week we couldn't get back above that level. We finally were able to break above it. You can see the moving averages, that nice curl upwards as they finally had that cross and are beginning to cross back in the other way, where the 20 crosses back over the 50, signaling another that the momentum is starting to climb up again. And again, the big thing was we broke out and then we expanded right away. Now, selling pressure the last couple of days, and like I said, it's probably more along the lines of premature price taking for traders that don't want to wait all the way up for the highs. And everything I just said about the S&P 500 stands for the NASDAQ as well. We have our clear level of support. We likely will bounce before we hit that support. We have a gap to fill, and we'll probably bounce somewhere in either before that gap or a little bit into that gap. And like I said, more likely than not, we come up and test highs. Now, if we don't test highs and we just slice right back through here, well then we have support down here at 270 after the moving averages, and then below that around the 260 level as well. And the NASDAQ has been kind of the stronger index, and I would expect it to continue to behave that way. For those that follow the FANG stocks, you'll see that we actually had, they finally started to bounce a bit. We looked at them not last week, but the week before that, and they were kind of all struggling. And I think this is a good sign that the market is ready to bounce, is the fact that all of these are starting to pick up momentum again. You can see Facebook breaking through a critical level as well, around 268, and getting back above its moving averages. Apple had a nice move into their event from I think it was yesterday, and they had the nice move running up into it, and they've kind of stalled out with the markets, but they also have had a nice move up. Amazon, same thing. You can see it's already made a move back close to all-time highs. Netflix already kind of came up and tested highs as well. And then the last one is Google. And Google, same thing, more like Apple and Facebook in that it's still kind of making its way upwards, but it's done a good job of bottoming out and starting to bounce again. And so the fact that all of those are moving is, of course, going to be reflected in the Qs because the NASDAQ is so heavily weighted with those stocks. But the fact that we see buyers coming back into those is showing that there's a level of confidence coming back in where the market is starting to want to rally again and start to make its way back up. And so, like I said, I think the most easily drawn conclusion we can get from this is that the market is going to retest highs, and that's what I'm expecting. So despite the fact that we're seeing selling pressure these last couple of days, I fully expect us to come up and retest those levels. Now, of course, I could be wrong. That's why we have stops, and that's why I trade the way that I trade. But at the moment, I'm anticipating us to find support in the next couple of days and make another run at these highs. And like I said, if it fails, well, we have our warning signals. We know what levels are important, and then we could go ahead and reassess what the market's doing from there. Now, we move on to the Dow. The Dow's a little bit different. Now, we do have the same general breakout, which was this green line again, which is the relative lines going back all the way back to this Thursday on September 3rd. And the Dow did the same thing that the others have done. It's been able to break out, and it's been able to make a move. Now, we did have another really critical breakout, which was this red line. Now, I didn't point this out on the S&P 500, the NASDAQ. I'll go back and show it to you in a second, but this red line is a critical support line from back in February, right? And I'll zoom out now. I just wanted to give you an idea of what we're looking at. All right, so that was critical support right before the market broke down. Once we got wind of exactly how bad the coronavirus was and what kind of an impact it was going to have on our economy, we finally broke back above that. Now, we did break above that in September and failed pretty quickly on the Dow, but we kind of got right back above that. That's a critical level to get back above. So we're not near all-time highs in this case. We're just near recent highs. The Dow actually came short of those all-time highs back in the beginning of September before we started to kind of accelerate back down. And so this was an important level to get back above, and it's a good job that it did that as well. So this is where it's a little bit different, because you take a look at the S&P 500, and you see where we are with respect to that support level from earlier in the year. You can see we left that way behind. Matter of fact, that was our support as we came up right now and pulled back and tested that. So that is long in the rearview mirror on the S&P 500, and it's even farther back in the rearview mirror when we look at the NASDAQ. For the Nasdaq, it's way down here, right at 218, and we left that long time ago. And that's matter of fact, even our all-time highs from back in February, we've left kind of in the dust. So again, showing that the tech names have been the strongest this year, which is something that we've harped on in this Wednesday stream throughout the year, is just how strong the tech names are when you compare them to what the Dow names in particular and the Russell 2000 is doing. And so nice move by the Dow to get back above some critical levels that it needed to break through, but there's still work to be done to come up and reach all-time highs. And so this is maybe one for those that think that we're still range-bound or going to be range-bound, is that the Dow is still not at all-time highs, and of course IWM, which we'll get to in a second, is nowhere near all-time highs as well. And so, you know, as far as the rest of the analysis, it's very similar to the S&P 500, the NASDAQ. We still need to probably come up and test these highs. And support-wise, we have support here. We have two levels of support as well as the moving averages, which are coming up to meet right around that area. So it's more likely than not that we find buyers somewhere in this zone and that we don't break through that. If we do break through that, well, then we're probably going to head all the way back down to 266 and possibly even down to the 200-day moving average. And that would, again, indicate that the market is going to be definitely range-bound and is going to have some trouble trying to climb higher. But again, that's not my expectation. My expectation right now is that we find support soon and make another run towards recent highs and all-time highs in the stronger indices. There's really not much else I want to add to the Dow Jones. It's basically very similar price action to the S&P 500 and the NASDAQ, just relatively speaking in a weaker area. And then finally, we have IWM in the small caps. And of course, they're going to be a little bit different. Now, this again is still very positive. So again, that red line, right? And now we know where that red line stems from. It's from the support levels that we found earlier in the year. And in this particular case, it was also resistance from, the middle of last year. Very strong level of resistance. So this is actually a very critical level on IWM. And as you can see, IWM had not broken out from that level at all this year. We tried way back in August and failed. We tried again in September when the markets were at highs and failed. And we finally broke above it. So this is a very positive turn of events for the small caps and for traders looking to assume risk in the market. Because again, the small caps are typically how you gauge risk in the markets. When traders are aggressive and seeking any kind of return they can get, they're going to go to the more volatile or risky assets, and those tend to be in the small caps. And so it's nice that we're seeing them start to kind of play catch up. They're starting to break through critical levels, and again, doing similar to the S&P 500, the NASDAQ, and the Dow, in that we're pausing here, but we're pausing above a very critical level of resistance, and this should flip to support now. And if that's the case, then we should have a good floor here for the price action in the near future, which should hopefully give us more buyers to step up and propel this upwards, and to start challenging the recent highs, and possibly at some point make our way back to all-time highs, which again are still pretty far away on IWM, right? We still got a long way to go to get back to 170. If we go to weekly, you can see that's not even all-time highs. All-time highs is way back here, 173 from the middle of 2018. And so it's been a while since the small caps actually made their way to all-time highs. And that would be the ultimate signal that we're going to really get another strong rally, would be if the small caps could participate and actually print new highs as well. Now, the market has done pretty well without the small caps leading the way, so it's not out of the realm of possibility that we continue to rally even if the small caps lag behind. But it would be a pretty nice sign if the small caps can continue upwards and try to catch up. All right, so that's the four major markets. I think it's pretty clear where we stand now compared to where we've been in the last couple of weeks. And like I said, I think it's a bullish turn of events compared to what we've done. We've been correcting pretty steadily throughout the month of September and beginning of August, and we've finally gotten a nice bounce, and at this point it's really a matter of how far is this bounce going to go before we find resistance. Now, I don't expect us to break through all-time highs quickly. I expect us to chop out and maybe stall out once we reach or get closer to them, because again, we're still getting close to a pretty critical point in our I guess not economy, but in our nation at the moment with the elections coming up, and it's obviously a pretty volatile time considering how the candidates are, the candidates we have right now, and how the market and how the country is reacting to either one of them, depending on who you are. And so there's a good chance that we will stall out soon, but I think that we're going to make another run towards the top of that range before we do stall out. All right, so let's take a quick look at the U.S. dollar, speaking of our nation, and then we'll look at gold, silver, and again, those of you that are in here, if you have a chart you want me to look at, or if you have a question, feel free to type it in. I'd love to know what you guys are talking or looking at. I'd love to have some interaction here, and just kind of chat with you guys, and sometimes that spurs us towards better ideas, but it also, I don't like talking for an hour without anyone interacting and talking back. It gets kind of old to just sit here and talk. I'm not normally a person that likes to talk a lot. I'd rather kind of engage with other people and respond to what they're looking at. All right, so here's the U.S. dollar. Now, the U.S. dollar did have a nice break and a nice move upwards, and this was a nice bounce and a nice signal that it was finally finding a bottom. Now, it has struggled since then, and it has kind of dripped down slowly, and actually has fallen right back below kind of an important level here at 25 on the UUP index. And so, as you can see, we're losing a little bit of momentum now. I don't think it's the end of the road yet. I think there's still a decent chance it just bounces here and gets right back above it, and it just needed to kind of overshoot these levels. Particularly on this index, since it's a U.S. dollar as an aggregate, the trend lines aren't quite as important as much as the bigger picture. If we look at the more closely followed currency crosses, for instance, you look at the euro-US dollar, remember in this case, up is good for the euro and down is good for the US dollar. So you can see again, it's the mirror image of what we saw in UUP, right? So the US dollar had a move against the euro, and the euro broke down a bit, and then it kind of reversed course, and it's kind of come back into that range, which is exactly what we're seeing on the UUP index, just flipped in the other direction. And so it's going to be the same thing. For the U.S. dollar to pick up some more strength, it's going to need to push back through and below this 117 and cause the euro to drop down below its moving averages again and kind of hold below this range that it's trying to maintain here. If the euro maintains this range, it's not necessarily the end of the world. It just means, again, normally when you have moves, strong moves in one direction or the other, they don't always V. It's kind of become this thing in the markets recently where we always expect a quick bounce up and a quick bottom and a quick up and a quick down. You don't normally get V bottoms and V tops. Normally it goes from, you go from positive to neutral and then to either negative or positive. And so in this particular case, we're just in neutral right now, grinding out and trying to figure out where the market wants to go next. And as far as the euro-US dollar is concerned, it's really just stuck in neutral right now. And in this range, it doesn't really know where it's going to go next. If we look at the US dollar versus the Canadian, you'll see again, the US dollar had picked up a lot of strength the last couple of weeks, and then it's kind of faltered a bit, and it's actually dropped down quite a bit and is right back down to near support. Now, this is basically a positive and a negative. It's negative in that it couldn't hold this breakout point around 131, 132. Positive in that it's finding support before it hits the recent lows down here at the 130 level. I think overall this is not really that great of a sign, but again, we weren't expecting a V bottom here, right? We weren't expecting to trend all the way down for months on end and then all of a sudden just turn around and rally straight back to highs. You're going to have to find a base, and you're going to have to develop an area where there's going to be accumulation of US dollars. And so this is the beginning of that, is the fact that it broke the downtrend, and now it's a matter of establishing support each time it comes down into this 130 area, which is what it's trying to do right now. So, not the strongest chart, but it is showing signs of support here, and it is showing signs of finding a clear tradable bottom, which is where it's at right now. And so there's a decent chance that the US dollar tries to rebound versus the Canadian somewhere around here. And if we look at the US versus the yen, and again, for those of you that are in here, if you're not Forex traders, I understand not a lot of people trade Forex, but this still gives us a better idea of how commodities are behaving and how the US dollar still drives our stock market and prices really of almost anything in the world, because it's by far the currency that's most used. And so it's still important to kind of judge where we stand. And for those of you that maybe don't trade Forex, if you like technical analysis, which I would hope that's what you're into if you're following me or in here, when you understand technical analysis, you can trade pretty much any instrument. And so when we're looking at the US dollar, sure, you might not want to trade this, but this still gives you a good idea of what the market is going to do. And you know, even when you go into something like Bitcoin, it's still very related to how the US dollar behaves. And again, technical analysis is going to give us a good idea of how this is going to trade as well. So there are a lot of different instruments you could trade once you understand technical analysis. And it's not really just a matter of, well, I don't trade Forex, so I don't need to pay attention here. But like I said, for those of you that are in here, we had a few more viewers that stepped in. If you have questions on stocks or anything else, feel free to ask, and I'm more than happy to go through and take a look at them. Now, the U.S. versus the yen, as you can see, a little bit different. Not quite as weak as the other two, although it's still not really that strong. And you can see there was a long time here that it was at a very critical level here, around 107, and it flipped. And that support became resistance, and you can see we tried to bounce and failed, tried to bounce, failed, and then since then we've been kind of dripping lower, but we're still establishing a nice floor here around 104, and this pullback that we've seen in the dollar over the last week hasn't made it back to that level, but we're getting close, and again, this is another key area where it could find some support before getting to that, and if it does so, we should find support soon and buyers to step in. But more likely than not, we might have to come back down and test 104. And I think generally speaking, when we look at this overall, you know, the US dollar is trying to bottom out. It's not doing a great job of bouncing, but it's also not doing a terrible job of holding either. It's not breaking down further at the moment. And so what does that tell us about gold and silver? Well, it tells us that gold and silver are going to be stuck in neutral as well, right? And you can see this pattern on GLD in particular, where it's losing traction, right? And it's doing something very similar to what we saw in the US dollar, which was, you know, you have this level here, and then you break below it, and then you kind of get stuck. That's what we're seeing on GLD right now. With the US dollar kind of unsure whether it wants to bounce or not, gold is unsure what it wants to do, whether it wants to break down or try to bounce. And I think I don't like the chart I'm seeing right now on GLD. I normally don't trade when you see a pattern like this, right? And so we'll kind of extend these trend lines. It's not really important that I match up the levels as much as just give you an idea of what the pattern is, right? So you have this triangle, right? And you have this floor. And when it's above these trend lines, you're in a good place, right? When it's on the wrong side of those trend lines, you're in a bad place. And so at the moment, it's not in a good place. Now, that being said, it is close to getting on the right side of these trend lines, right? And if it does so, which it did try back here on October 9th and October 12th, if it can get back above those and maybe break through its 50-pair moving average, well, then we've got a tradable pattern, right? Because then we've got a breakdown that turned out to be a false, or maybe long, you know, not long-lived or kind of short-term, and you got to break back, and then you have a trend that you're breaking through. Now, again, this trend line isn't necessarily the most accurate at the moment because I'm just kind of giving you a bigger picture of what's going on. I haven't really connected the right trend lines to give you a good idea, but generally speaking, you can see there's a triangle here, there's a floor. At the moment, gold is on the wrong side of both of those, right? And so it needs to get back above those, and when it does, then it becomes something we could trade and something that you're a little bit more confident that you're on the right side of with the buyers and the sellers. Now, SLV, again, same sort of thing. It tried to break out a couple of days or last week and it failed, and it's below a key support level. Now, again, we do have a nice little pattern here, a little triangle, and if it can break back above that, then that's good. And that means that it likely wants to come up and test the 50 period and possibly all the way up to 25. But if it fails, then we're going to get a move right back down to 20. So until it shifts and gets back above those, you know, I'd rather just kind of watch. But it is getting kind of close to a spot where it might be worth an entry if it can break these recent trends and get back above these levels. So if anything, a little bit better chart, or a little bit more close to an entry than I expected when I first looked at these. All right, and then finally we have oil. Again, we got to zoom out past that oil apocalypse from April. And as you can see with oil, it's still doing the same thing it's been doing for a while, which is it's really just trying its best to stay around $40. It can't get above 44 or so, and it's been holding and trading above about 36, and it's right back in that range. It's right at 40, so it's got about $3 or $4 upside, and it's got about $3 or $4 of downside. And more importantly, the critical level here is it has to break above about 41.30 in order to get back into that 43 to 44 range. Not really much more to say about this. I think that oil is just, it's reached an equilibrium and it's trading sideways, and until we see a change in this, right, and if we zoom in a little bit more, we can see what I'm talking about. Whoa. You can see what it's basically just trading in an equilibrium, and it's in a pretty good balance right now, which means it's range bound, which means you want to buy at the bottom and you want to sell at the top, and vice versa. And until that pattern changes, we could just kind of play it along those lines. Now, it's in the middle of that range now, so despite the fact that it looks like it wants to break 41 and that looks like a bullish pattern, there's just as much upside as downside right now, so not something that I'm that interested in at the moment. All right, so that's the markets. That's oil, gold, silver. That's the U.S. dollar. That's all the commodities. We have time for a couple charts. If anyone has anything that they want me to look at, feel free to type in now. I wanted to point out, I guess while I'm waiting, hopefully you guys have something to look at. But for those of you that follow me on Patreon, or are wondering what goes on my Patreon, Stock Darts blog, here's a few of the trades that we've been looking at. We've had a decent time these last couple of weeks. I think a couple of weeks ago, right at the end of September, we started looking at Texas Roadhouse, and as you can see, since that trade triggered, it's been kind of straight up, right? So this has been a really good trade for us. Booked some profits here, 66. Booked some profits a couple days ago on the shooting star. And at the moment, just have a really small piece left in case it continues to climb upwards. But this trade is starting to get close to the end of what we were really wanted out of this, right? Another chart that had a nice move for us that we were also looking at back then is Disney. Now, Disney is struggling today, but again, we took partial profits as it came up and hit 130, 131. So we're in good shape here, even if it does come back. And until we get a shift in it, we're happy with how this is behaving as well. Another one that we've been looking at is LLIT. And again, this one gave us good profits already twice now for those that maybe missed it the first time. We're looking for some profit taking right around 47, 48. And our ultimate target's here 56, which it may or may not get to, but we've locked in enough profits here where we have a profitable trade. And again, you can see the good thing about this is that we're getting our moves so quick that we can, after a day or two, we're really in a good spot where we don't have to worry too much about that. Another one that we were looking at recently was Apple. And that one as well has done a nice move for us. Yesterday was a good day to take partial profits on a news event. And I think like the markets, it's going to continue climbing upwards. So I'm still holding a good portion of this trade, but we did lock in some profits on that. And so those are just a few of the names that I've been kind of highlighting, usually on our Monday posts on patreon.com/stockdarts. And those of you that are members or subscribers hopefully have followed me along with these trades. And our trade from this Monday is starting to pick up a little bit of steam today as well. And so, generally speaking, over these last couple of weeks, I've been happy with the way our trades have been working. I like the trades that I've been highlighting, and I feel like we haven't had too many trades that are losers. Matter of fact, I think pretty much all of them have worked out pretty well for us. And really, it's just a matter of the speed with which they've moved. Some of them have moved quickly. Some of them maybe took a little bit of time to get moving. But generally speaking, they've all been moving pretty decently for us and have been able to give us pretty steady moves. I think NGL was another one that was just kind of slowly and steadily climbing. You can see again, this was another one we looked at right at the same time as Texas Roadhouse. And as you can see, it's been slowly making its way upwards and has finally reached a point where we could take partial profits on it. But the good thing is that it hasn't really violated anything that we're looking at, and it's really just starting to pick up some steam now. And we're looking for a bit more out of it, but for now, it's doing pretty good. And so, for us and for me in particular, anyone that's been following my trades, we've had a good time this year, despite the fact that the market has actually been pretty strong since March. But generally speaking, it's been, for a lot of people, maybe a little bit of a difficult year. but we've actually done very well this year. And so if you are interested, again, a lot of our posts are free, and a lot of the posts that even are subscription become free after a few days or after a week, in order to give you an idea. Maybe after, maybe they're not actionable after that time, but it gives you an idea of what I'm looking at and how I want to look at trading. So, if you are the kind of person that maybe is into technical analysis and you want to learn more, or you want to see more about the way I like to trade, that's a good place for you to go, and to just go back, go back through some of my old trades. You can see, we have a lot of stuff on there. But just to highlight it again, if you go to this one right here, patreon.com/StockDarts, just go back and take a look. There's a lot of free content on there, and there's plenty of good stuff for you to watch if you're trying to figure out. I'm going to type it in the chat as well. Oh, sorry, that was wrong. Autocorrect is, it's one thing with Apple products. They like to correct you a lot. And I'm typing that from my laptop, by the way, in case you're wondering. So again, if you're interested in that, I'm not trying to sell too much here. This is, it's not even, that's like an $8 subscription for those that pay it. It's, it's, when you think about it, you're paying $8 to get a good 12 to 15 trades a month. Most newsletters are going to be in the hundreds of dollars. And when you look at our record of success, you'd be surprised. You'd be wondering why it's so cheap. But the truth of the matter is that I like to have traders learn from me. And I understand a lot of traders don't have a lot of money to trade at the moment. They're just learning. And so I think that's a good way for you to go ahead and look at the way we trade. And just try to learn as much as you can. Thanks, Butterface. A good workman never blames his tools. That's true. That's true. But I got to tell you, man, if anytime I type on, you have no idea how much my phone decides that it wants, what it wants me to type. But, all right. So it looks like no one else has a chart request, and no one has a chart they want to look at. So I could probably wrap it up here. Again, those of you that are in here, if you ever have a question during the middle of the week or at any time and you don't know how to reach me, you can always find me at Twitter, just StockDarts at Twitter. You can always find us on our Discord and go ahead and interact with us there. Or you can just email me, stockdarts@gmail.com, if that's what it takes. But, I encourage you to ask questions. Don't be shy. Make sure that if you don't know something or if you want to learn about something, just ask. There's a lot of people out there willing to help. They just don't know that that you have a question. Okay. So that kind of covers it for today. Hope you guys have a good rest of this week, and we will meet again next Wednesday.